Hello everyone, I want to provide you with a market update today. Many people are currently wondering whether we're about to experience a pullback. This question arises after a significant market rally and people are unsure about whether they should buy now or wait for a potential pullback. In this video, we'll delve in some data including a look at long-term cycles and the possible drawdowns that occurs in bull markets, particularly in the context of Bitcoin and Ethereum. Now, let's dive into the short-term price action of Bitcoin. In the recent phase, which can be described as an accumulation of recovery period, we've witnessed substantial price expansions. Each of these expansions has typically been followed a sell-off and consolidation phase where sellers enter the market, causing the price to retrace. It's the classic pattern of expansion followed by a sell-off, which has been the norm in previous cycles. However, the remarkable thing this time is that things are different. Instead of the usual pattern, we've observed a breakout from the bear market zone and the price has been steadily grinding higher without the usual significant sell-offs. This is fundamentally positive for Bitcoin's price as it suggests that buyers are fundamentally entering the market and establishing positions. One significant catalyst for this change in behavior seems to be the anticipation of the approval of a Bitcoin ETF. The media has been doing its job in preparing the market for this development, with numerous interviews and reports indicating that the approval is imminent. As a result, market participants are realizing the need to secure their allocation in anticipation of the ETF launch. The $40,000 level is a critical resistance level for Bitcoin, and it's unlikely that we'll approach it until the ETF is officially approved or at least few weeks before the approval when certainty is high. Speculation may drive the price higher in the lead-up to approval. Until then, we could be in a holding pattern between the current price and this key resistance level. It's important to know that buyers are flooding into the market and this trend may continue, partly due to the Bitcoin cycle, which we'll explore shortly. Now let's delve into the Bitcoin cycle analysis. Currently, we find ourselves in the recovery phase of the Bitcoin cycle. The expansion phase typically follows the halving event. Personally, I believe that a Bitcoin price of around $35,000 is still reasonable. I'm sticking with my dollar cost averaging strategy and maintaining consistency in my approach. I'll continue with this strategy until we break through certain key levels, at which point I'll need to make decisions about further allocation or waiting to see how the market behaves as we approach the potential blow-off top. It's important to know that the Bitcoin cycle usually peaks around a specific period, although the exact timing is uncertain. The previous cycles have shown that time is a crucial factor. The peak typically occurs around 800 to 1,100 days after the halving event, followed by a drawdown period and then accumulation. This is the time to allocate capital when many may be pessimistic about the market, calling for significantly lower Bitcoin prices. Even now, time is running out within this cycle. Between the current point in the cycle and the next halving, there is still time to allocate, but it's dwindling. Historically, people have prepared for the halving by starting to allocate, and those entering after halving may have missed some of the most favorable entry points. The best time to invest has often been before the halving. If you're considering Bitcoin as part of your portfolio or for a short-term trade within the next 12 months, you need to allocate soon. Previous halving cycles have shown that the ideal time to allocate capital is running out, and the peak typically arrives around 300 to 500 days after the halving, or even sooner as seen in the previous cycle, which peaked around 250 days after the halving. This is why people are now beginning to allocate capital following the patterns of previous cycle. Now, let's discuss drawdowns in both Bitcoin and Ethereum. Drawdowns are a normal part of the market cycle and they can present opportunities for investors. In a Bitcoin bull market, it's typical to experience drawdowns of around 20 to 30%. Looking back at the 2016 or 2017 cycle, you can see that drawdowns reach around 30% and there were several instances of this. If you're trading in the shorter term, you don't necessarily need to chase breakouts. Instead, you can be confident that these pullbacks will occur. Even if you're trading over a month or a few weeks, the exact price at which you enter doesn't matter as much as being in the market during a drawdown to take advantage of the next expansion phase. For Ethereum, this cycle has seen a couple of dips with drawdowns of 44 and 30%. These drawdowns appear to be somewhat lower than those in previous cycle, suggesting that Ethereum may be maturing and more people are buying on dips. It's important to understand that these dips are opportunities, especially in the current bull market. This market appears different because central banks are expected to adopt easier monetary policies in response to economic challenges. The FED has paused its interest rates hikes, and the next likely phase is for monetary policy to become more accommodative. So, while there is still economic uncertainty and volatility, the general trend in this bull market is upward. Buying these dips and seizing these opportunities can be a successful strategy in the current market environment. If you're considering a longer-term investment approach rather than engaging in active short-term trading, there's a compelling case for getting into the secular growth trend of cryptocurrencies. To do this, let's draw a parallel with the adoption curves of various technologies such as mobile phones, internet users, TVs, and radios. These technologies witness massive adoption when they first emerge. As they become an integral part of everyday life, their adoption curves naturally start to slow down. In the context of Bitcoin and Ethereum, we find that they're currently at a relatively modest level of adoption, hovering at under 1%. The growth in their adoption has slowed, partly due to the nature of these assets as financial instruments and the influence of central banks on the broader financial landscape. However, even a modest increase in their adoption rate, say from under 1% to 1% or 2%, signifies a substantial secular growth in these assets. This is a noteworthy point to consider, as it suggests that the road to mainstream adoption for cryptocurrencies is still wide open. When it comes to Bitcoin, there are several key metrics and data that can help us understand the optimal times to invest. The Sharpe ratio of Bitcoin compared to gold, for instance, indicates that the best time to invest is when Bitcoin is undervalued in comparison to gold. This ratio serves as a significant guidepost for investors seeking to make informed decisions about their Bitcoin investments. This is further reinforced by on-chain data, MVRV or market value to realized value ratios, and various other data points that demonstrate a pattern. Investing during a contraction phase in Bitcoin's price, particularly if you anticipate that the overall adoption trend will persist, can be an advantageous strategy. The point at which the price of Bitcoin is at its lowest during the cycle is an excellent entry point for investment. Investors often wonder when is the right time to enter the market and when to exit. Historical data suggests that Bitcoin has consistently outperformed gold in each of its cycles. However, in the current cycle, we are yet to reach the point where Bitcoin has substantially outperformed gold. While the best return of this cycle might be behind us, as indicated by the $15,000 price point, there is still considerable room for growth. The key takeaway here is that the potential for significant gains is not exhausted. For traders who thrive on short-term trading opportunities, the deposit bonus offered on Bybit is an enticing proposition. This bonus can enhance your trading capabilities and provide opportunities for maximizing returns. Additionally, those looking to deepen their understanding of cryptocurrency investments can look forward to an upcoming update to the Crypto Investor course scheduled for the end of the year. This update will feature the latest research and insights to help crypto enthusiasts navigate the ever-evolving world of digital assets. It's essential to note that this course is free for Crypto Course members, making it a valuable resource for staying informed and making informed investment decisions. Thank you for watching and stay tuned for future updates in this dynamic space.